You are listening to Charting Wealth's comprehensive review and forecast for the week beginning Tuesday, the 5th of September, 2017. Remember, Monday is Labor Day, and we will not see the markets open. Instead, they will be opening a day later on Tuesday. We see Friday the markets ended mixed for stocks. The S&P 500 up 0.16%. The Qs, the NASDAQ 100, down 0.14%. Bonds down the most, 0.98%, almost a full percent. Gold up 0.19%. Boy, gold has just been flying up. We've been tracking that rise the whole time. But first, let's jump into the S&P 500. And before we do that, we're getting ready to do a number of different trainings. And we would appreciate knowing from you what you are requesting as the folks we care about the most, the people that join us every day for the daily reviews and, of course, once a week for this comprehensive review and forecast. Would you tell us where you're having your most difficult time and you need to build your knowledge base, whether it's with candlesticks, Bollinger Bands, getting in, getting out of trades, all the different things you're doing when you are doing your practice trades, and what we can do to give you knowledge. If you need to know more about the price percent oscillator, the derivative oscillator, the exponential moving averages, better understandings of minutia on the chart, whatever it is that you have questions about, please let us know and we'll try to incorporate that into the training. Now let's jump in. What do we see going on in the S&P 500? After 3 down weeks, we ended this last week with a strong up week. In fact, movement is well above the 2-day and the weekly trend line. What's interesting, though, with all of that up movement, what are we seeing on the S&P 500 when it comes to our indicator, which is the number one thing that we look at, the price percent oscillator, very similar to the MACD. For those of you familiar with that oscillator, we've got a great training at the website, chartingwealth.com. Please go to training. We've got a really, really good one on the price percent oscillator. Would very much like you to take that lesson so you have a better understanding as to how and why we use it. Also, in the How to Read a Stock Chart video, we talk about how important the MACD, very similar in calculation. We think the price percent oscillator is a better indicator to use. We actually used to use the MACD. We switched over after one of you suggested we really look into that. We did. Immediately made that change. Why? Because our job is to effectively read the charts and to do I would stop doing what I'm doing today 100% and do something completely different if it worked better. That's all I care about, is being able to follow trends accurately. That's our number one job. I don't care how we do it. Now, what do we see going on that's a little odd with all this up movement? We see that the price percent oscillator is still negative. We see that the derivative oscillator is still considerably negative. In fact, it's almost the same as it was in the prior down week. We do have the price percent oscillator heading up toward the signal line. We do not have a crossing yet. Again, as we look at this, markets are still showing some weakness. What's going on the 2-day chart? It did not end the week crossing over. It's awfully close. The derivative oscillator crossed over, but the price percent oscillator did not. We've had 2 strong candles with upward movement, but again, 2 strong 2-day candles with upward movement. But again, as we look at the charts, we don't see the crossover occurring yet. If that had flipped over as it flipped down on both the weekly and the 2-day chart, when we had the weekly vertical crossover and the 2-day vertical crossover occurring at the same time on Friday the 11th of August, that would be different. But we do see the way that the 2-day chart ended up. It is now well above where that drop started. So we'll continue to pay attention, and it may very well be that this upward movement continues throughout the course of the next week and we get a crossover going up on both the 2-day and maybe toward the end of the week, the weekly. then things will be completely different. So we'll continue to watch. Don't have a trade now. We will pay attention and see what we see. Oh, and lastly, we do want to make sure we look at the 4-hour. We can see that 4-hour basically hit the same topping point both in the morning and the afternoon on Friday. Have things topped out? Don't know. Derivative oscillators continuing to gain energy, and the price percent oscillator continuing to move up strongly. So we'll keep an eye. Could be a topper. If it is, things cross back over going down. We never have a crossover going up on the 2-day. Then we might have some more down movement entries. We will see. We will let you know. Next, I'm going to go back to the weekly chart. Look at the NASDAQ 100, or as we affectionately call it, the Qs. What do we see going on there? Well, it ended also in an up week. And again, still down. Derivative oscillator still negative. The price percent oscillator still negative. As we hone in a little closer on that 2-day chart, it did cross over going up on Friday. Now, don't forget what we had on the 31st was the ending of the last 2-day candle. So the current 2-day candle is only 1 day into it. We can't call this crossover until that 2-day candle finishes drawing. That won't happen until the end of the day on Tuesday. But it looks like we're probably going to have a confirmed 2-day crossover. And again, what are we seeing on this 4-hour chart? Again, some topping movement. We basically closed below where things topped out in the afternoon on Thursday the 31st. So we'll pay attention. Things are still heading up. The derivative oscillator did lose a little bit of energy, but the PPO, the price percent oscillator, still heading up strongly. We shall continue to monitor. And like we said, if things cross over on that 4-hour chart going down, be ready to jump back into a down move since we've not confirmed yet the 2-day. If it moves back over and does not end up crossing, and we see things cross over on the 4-hour going down, the weekly's already primed for us to jump in on that. May or may not happen. We'll be ready. And again, folks, we're not forecasters. Remember, we're trend followers. So we wait for the trend to be set, then we follow it. Can you get in on more trades? Can you do more stuff? Can you buy and sell more? You can always do that. The market's open to fools. Every single day that the trading market is open, you can go in and buy and sell whatever you want. But we want to be smart buyers and sellers, smart traders. And again, when we talk about things, we're an education firm. We're not a stock calling service. We want you to practice with virtual trades, but you can do your virtual trades every day. We want to do successful virtual trades. First rule, don't lose money. Second rule, make money. Let's keep moving along. Back on the weekly chart, this time TLT, the 20-year bond fund. It was down for the day about 1%. Hard to see on the weekly chart. Derivative oscillators continuing to gain energy. The price percent oscillator not going up to the same extent over the course of the week that it was in the 3 or so prior weeks. It's weakened a little bit, but again, 4 weeks of strong up movement in the 20-year bond. If we look at the 2-day chart, we can see that it did drop through the 2-day trend line, broke that on the first day of this latest 2-day candle. And again, no crossover going down yet, but significantly weakened. And as we look at the 4-hour chart, we can see things down in the morning and then tapping around that same area in the afternoon. Big drop off in the derivative oscillator in the afternoon. So again, continue to keep an eye on what's happening. If you are in bonds, of course, that crossover in the morning on the bond fund and pushing through the 2-day trend line should be sending off warning bells. You might check the market around 10:30 on Tuesday morning and just see if you've not already pulled the trigger to get out, to take your profits, your virtual profits on that. You may very well consider doing so. Again, we have been looking at nice up trades in TLT over the last many days. So we're going to go back to our weekly chart And lastly, we will check out gold. Gold up 0.19%. We have weeks of up movement in gold, the latest week being the strongest. And you can see that the price percent oscillator hockey sticked up even higher, derivative oscillator even higher. Things are looking sweet on the weekly chart as far as gold goes. Gold started moving up all the way back on the week ending the 14th of July. And of course, we had that weekly vertical crossover on the week ending the 11th of July. Things have flown up since then. We look at the 2-day chart. We can see that it's clicking even higher. Derivative oscillator continuing to gain energy. Things are moving up quite sweetly. In fact, we can sort of redraw our 2-day trend line to more accurately depict the latest up movement. We have 3 candles as we like on trend lines, at least 3 connecting. Things are looking quite beautiful as we hone into the 4-hour chart, that prescient chart that again, over and over and over again, it did slide sideways for us for a while, but then it crossed back over going up beautifully. If you would have jumped in sometime in the afternoon after the crossover occurred on the morning of the 28th, somewhere around the price point of the opening at 123.18, things up nicely about, let's see, 123 to almost 126. So again, up close to $3, $2.50, $3. That is pretty decent, is it not? Since just the afternoon of August the 28th, Monday. That is quite beautiful. So we'll continue to watch gold. Remember, that 4-hour chart is a beautiful thing to behold, and we'll continue to monitor gold. All things being equal, my friends, always remember the markets tend to move in the direction of the largest chart. That's where we are as we end the week. Don't forget again, markets closed on Monday for Labor Day, so you've got an extended weekend. Go ahead and make sure that you're filling out your weekly market worksheet along with your daily market worksheets on Tuesdays, Wednesdays, Thursdays, and Fridays. But over the weekend, the podcast or broadcast you're listening to right now is for the weekly market worksheet. Make sure to fill that out. Those of you who don't have those materials, here's how you get them. You go to chartingwealth.com. You sign up for the daily market review. It's there on the front page. You put in your first name, your email address, and you will receive a daily email including our daily market review, which is a video for you to listen to. Everybody who listens on iTunes, of course, you get the audio version of that. You'll also get the information on how to read a stock chart video, the link to that. You'll get the daily market worksheet, the weekly market worksheet, and the trade worksheet. Those you need to fill out with each day that passes, and of course the trade worksheet for every trade. And you'll get a link to the layout that we use at freestockcharts.com and how to sign up for that and get the layout that we use on the podcast every day. Plus, you will also receive all the special trainings that we do. We're going to start including those exclusively to the people that are subscribers. You have questions, problems, concerns, we're happy to hear from you. All you've got to do to ask those questions is email us cw@chartingwealth.com. All the best. God bless from the whole team here. Hope you enjoy your holiday. From all of us at Charting Wealth.